I started this company, and I started the company after actually going on a lot of courses myself. So I went on courses, I read books, I went to events like this, and I started to try and learn to trade from people. And what I learned was things like head and shoulders and double tops and all that kind of stuff, and MACD indicators, and I learned that kind of thing. But what I realized, and of course candle patterns as well, we'll be talking about candles a lot today, but I learned all these names for things. And what I realized after a while, after I actually learned to trade, that I didn't really learn anything from those names. I didn't really learn anything from those books. I didn't learn that much from those courses. What I learned, though, was what I didn't need to know. So I started to realize I've got a really good understanding now of what you don't need to know. That actually all of that whole big book could be summarized down into not very much. Just a little bit of information sums up that whole thing. So I started to simplify it. And then when I started teaching people to trade, so that was early in my trading career. 6 years ago, I left my job to trade full time. And about 3 years ago was when Trade with Precision started. And it started, and I had a real passion to actually teach people exactly what you need to know and nothing else. So that's what we'll do today, and we'll get straight into it. We'll be talking about price action being the most important thing. We'll use one or two indicators today, but you'll see how the indicators become what I call like the icing on the cake. They're not the crucial part. They're not the crucial ingredients. You need to understand the price, and that is the crucial ingredient in every single strategy, because the price is everything. Without the price, we can't even trade the markets. The price is everything. You must have it, and therefore it has got to be the most important factor. And we're going to look at that in detail, and we're going to combine just some basic price concepts, some basic price technical ingredients into a very precise trading strategy, which you can walk away and apply immediately. Just a brief risk warning there. What we do is purely educational. We do not give advice of any kind. Have a read through that if you can. The full terms are on our website, tradewithprecision.com. Straight into the content, just a few notes. We're going to look today at a complete strategy called the Precision Moving Average Strategy, or the Precision MA. Now, this is most suited to if you're an index futures trader. In fact, this doesn't need to be index futures based, I just realized. But if you are index futures traders, it would be more suited to the latter part of the session, at least an hour or so into the session. So it's not really a strategy for the open. However, this is also suitable to any market. When I first started trading, I traded stocks, and I traded exactly the strategy on stocks. I trade Forex every single day. I trade exactly the strategy on Forex. I also do it on index futures. Today we're going to focus it towards index futures, so we can also keep focused on looking at certain markets and looking at certain time frames. But I do the exact same thing on other markets as well. What we're going to do is we're going to look to capture short moves in the direction of the trend. Those who saw me speak yesterday, we were trading against the trend yesterday. It was a fade trade going counter trend. Today we're trading with the trend. And we're looking though to catch a small move, as I always do, trying to catch a small move, a small high probability move. But then if we can get on the right side of a good trend, which is also part of our objective, then we stand to make a much bigger move. We stand to make a much larger profit. Every screenshot here, you'll see lots of live screenshots of live trades sitting up on the Dow or the Russell or something like that. Every live screenshot is from this year. They're trades that me or one of my team have taken this year, and I thought I would include them in the presentation. So first things first though, which technicals are actually stronger after the first hour? Which ones are better? Because there's certain things you can do on the open, and I'm sure many of you trade the open on index markets, but there's certain things that are actually better after that first hour. So, one is pivot points. Now, today's topic is price action, and the first thing I'm bringing up there is an indicator. I probably should have put it in a slightly different order. Pivot points are an indicator, but they're based on price. Also, people often ask me about if there was one indicator. I get asked these same kind of questions all the time. People say if there was one indicator that you could use, just one, what would it be? And it would be pivot points for me. It's by far the strongest, most powerful leading indicator that there is. So we're going to combine that today with other price action elements. We're going to look at support and resistance. This is going to be stronger after the first hour because highs and lows have been given time to form. We know the high of the day, the low of the day, at least within that first hour range. Back on pivot points, we know which ones have held, which ones have failed for the day. Looking at the trend. You don't have a trend 1 minute into the day. And actually, that's why the first little while of the day is harder to trade, because it's very, very volatile. And sure, the market's been trading before the Chicago Open at 8:30 or before the official kind of pit traded hours. However, so many people, including myself, including probably half the traders here, we start trading at 8:30 Chicago time when the market opens. We don't trade at 1 minute before that. We trade at 8:30. So therefore, that's when the volatility comes and that's when the market really starts moving. But an hour or so in, we start to see what's happening. We see the highs and lows forming. We can see the trend. After lunch is even better, later on in the afternoon. Moving averages. Moving averages, again, are an indicator, but very closely related to price. We'll look at the relationship between price and indicators, between price and averages. And the trending pattern that we want to look for on the averages has had time to form. You'll see what that pattern is shortly, but it needs some time to sort itself out for this moving average pattern to start to develop.